I came across this quote on Twitter the other day that was just too good not to share, and it needed to be a part of this course and it needed to be its own video because this is exactly what I'm trying to get across with the Bison Blueprint and the investing system that we use. So, this was a tweet by a guy with a really long name I won't pronounce, but the quote is actually from Peter Lynch, who was the founder of Merrill Lynch and Fidelity and ran the Fidelity Magellan Fund, one of the greatest investors of all time, was really, the Warren Buffett before Warren Buffett came around. And this guy doesn't get talked about enough. But I'm going to go ahead and read this for you because this is so profound. This is one of the most important things you will ever read in investing. So here we go. I ran $15 billion at Fidelity Magellan, and the single biggest lesson I can give you is this: the price you pay is the only thing that determines whether you make money or lose money over time. Everything else is noise. I have seen people buy the greatest companies in the world, Coca-Cola, Disney, Gillette, at 50, 60, 70 times earnings because they were convinced the growth would never end. When the growth slowed even a little, the stocks got destroyed. Quality didn't save them. The price killed them. I have also bought companies that were absolute dogs, companies losing money, companies in dying industries, companies nobody wanted, and made 10 or 20 times my money because I paid so little that the only direction was up. The margin of safety was in the price, not the story. There is no such thing as a good stock at any price. There is only a good price for a stock. Pay too much and you lose. Pay little enough and you can be wrong about almost everything and still win. I made 29 times my money in La Quinta Inns, a company nobody ever heard of. I made 20 times in Philip Morris when it was the most hated stock in America. I did not need a crystal ball. I needed a low price. This has been true since 1920, and it will be true in 2120. The price you pay is the only margin of safety you ever get. And again, that's from Peter Lynch. So let's digest this a little bit and apply this to the Bison Blueprint and how we're actually going to use this in our investing. First of all, we talk a lot in this course about undoing some of the biggest investing myths that are out there. One of the biggest myths that there is you have to buy quality companies. And this tweet addresses that myth head on. When you have a good price and a good company, you can have explosive catalysts for growth, but buying a good company at a terrible price will absolutely destroy your portfolio. And where the market is sitting today in late 2025, a lot of these big tech AI companies are being offered at a terrible price, and a lot of people are going to get destroyed. And that's what this talks about in the second paragraph here. When the growth slowed even a little bit, the stock got destroyed. The quality didn't save them. So everybody's obviously super optimistic about AI going into the future. These stocks have a ton of growth. AI is going to take over. But when you're buying companies like Nvidia and Google and Tesla at these massive prices, they've gone on 100%, 200, 300% runs over the last couple of years. Nvidia, I think, is maybe in the thousands. If you're buying these companies at these levels, you are too late. And as soon as the growth slows, you will be destroyed. That doesn't mean you have to short these stocks, but if you're in these stocks, you have to get out of them. Uh, and so we have a great method in the Bison Blueprint of how to identify when to exit these stocks. So getting out in euphoria is one of the best things that you can do. But let's talk about the other side of this tweet about buying companies that were absolute dogs, companies losing money, companies in dying industries, companies nobody wanted. So a lot of times when I'll make an alert for the Bison Blueprint, people will reach out to me and say, why would you recommend this company? I've never heard of it. This industry, no one cares about this industry. AI is the big thing right now. Why are you not buying AI? You're buying, restaurants, you're buying food companies, you're buying oil companies. And that's because the price that the stock is at right now is so little that the only direction is up. And now we can confirm that through technical analysis with things like support levels. When you look at all-time lows and 20-year lows, things like that, a lot of these stocks are sitting at their long-term lows. So we have a technical reason telling us why this might not go any lower. Um, and all that it needs is a catalyst to go up. Now, like this quote talks about with La Quinta Inns and Philip Morris, there's two types of catalysts or two types of bounces that occur in the market. The first is some kind of news bounce where you have good news that comes out. Maybe the industry starts turning around. Maybe um, the earnings are getting better. The economy is getting better, things like that. So a stock can go up because of some kind of catalyst. But a lot of times there's at least a small technical bounce in these names, which means that they've gotten so oversold that the price just can't go down any further. And that's not to say that companies don't go bankrupt. That's not to say that if you're buying a incredibly small stock, crazy company that doesn't have any revenue, that stock can't be delisted or things like that. But when you look at companies like La Quinta Inns and Philip Morris, those are probably, La Quinta Inns was at the time probably $1 billion company. Those hotels aren't just going to go away someday. And Philip Morris is the biggest tobacco supplier. It wasn't just going to go away. And so there's at least a technical bounce that can happen in those. So I want everybody watching this video to literally print this quote out and come back to this. Because when you see the alerts that we put out, this is exactly what we're talking about. That the only margin of safety that you ever get is the price that you pay. And let me show you an example of what we mean on both the upside and the downside. So this is an alert that we made recently. It's for High-End Celestial Group. Again, it's not a company that people know about or care about. It's not in an industry people care about. These guys make like snack food and healthy alternative kind of snack food, stuff like that. Right now, the price is at $1.17. So in the about 30 years that this stock has been traded, this is at an all-time low. So it's sitting at its support level here at $1. What what do we look at when we look at the risk versus reward here? So let's say you put 5% of your portfolio in this and the company goes bankrupt and this gets delisted. That would be a huge hit. You lose your $5,000. But let's say this has just a technical bounce to the $6 level here. Nothing crazy. There's no news. There's no resurgence of the snack industry or anything like that. We're just coming back on a technical bounce to the $6 level. You made 6 times your money. So that's a 6-to-1 risk reward ratio. So that same $5,000 turned into $30,000. So this isn't what we call an asymmetrical bet. And these are the kind of bets that you want to make all the time. Now, a lot of people will uh, get into a stock like this when it is euphoric. So when this is at $70 and everything's going well, that's when a lot of newer investors will buy a stock. And if you would have bought this stock at $70, you obviously would have lost about 99% of your money to today. So having the ability to jump in when the margin of safety is in the price is what the Bison Blueprint is all about. And so to reiterate, when you're buying this at $1, you can make 6x your money. And then if it gets a bigger push, you can make 15x your money, or 26 or 45 or 70, about 56, 70x your money. Those are insane risk reward numbers. And it makes sense to place these types of bets. Now, let's take a look at Google. And I use this because I have a friend who I really love to inverse the investments that he makes because he is famous for buying euphoria. So when we look at the Hind chart in this Google chart, let's take a look back at this and look at this just meteoric rise from $6 to $70, 10x straight up. Now, going back to Google here, we're going to see that same type of look on this chart. It's all the rage. It's gone up to from down here, 20, 30, 40 bucks, all the way to $325. Now, this is going to run out of steam at some point. Now, does that mean that this is going to be a $1 stock someday? Probably not, because this is, it's a big tech company. The world revolves around it. We all use it every day, those kind of things. But if you are buying Google at $300, you are doing investing completely wrong. We all know that Google is a great company. It will be around forever. But when you buy this at $300, you are skewing your risk reward ratio incredibly negative. The chances of this going up further are probably 10%. And when I mean that, I mean significantly further. If this pushes to 340 or 350, I wouldn't consider that much further. But the chances of this going to 600, 900, I mean, the market cap on this thing, that would mean that this is becoming like bigger than the economy of the US and China or things like that. It's just not possible. So at this point, we're selling stocks like this and rotating into stocks that give us the best opportunity. All the technical indicators are flashing red here. Everything's overbought. I don't have them on the screen here, but the RSI is probably overheated. The MACD is overheated. Everything's just screaming, you need to harvest your gains here. So think about this quote as you make your investments, that you are always skewing the risk reward to your favor and buying at a price where the price is giving you that margin of safety and giving you that upside opportunity. And that's why the Bison Blueprint has been proven over the last 3 to 5 years that I've been doing this to continuously find big winners, big gainers, while limiting the downside and limiting your drawdown. So keep this quote in mind. It's a quote. And I hope that this gives you a really great perspective on what we're trying to accomplish here.